most of the audience of this podcast would be accountants, if not all, and then they are perhaps less used to these sustainability concepts, then what can the IFRS Foundation support that can support the application of this new sustainability disclosure standards? Is there any specific plan on that?
Yeah, so it's really important, and we recognize that, in many ways, being a standard setter comes with it, a responsibility not just to produce standards, however high quality, and these are really high quality standards because they draw on so much intellectual capital over the last 10, 15 years, but also that we need to engage very proactively with the market on the implementation, particularly of IFRS S1 and S2. So it's great that we have this kind of potential forward look in terms of the next projects, but also we have to engage with jurisdictions to help support the implementation of S1 and S2. And we're doing that, I think, in two main ways.
Okay.
One, we're producing additional material. Some of that will be educational material, guidance, an adoption guide, basis of conclusions. So if people want to look at the standards and look at how the board came to the conclusions, that basis of conclusions is available for people to look at. So that provides a really good reference guide to help support an understanding of why
Hello, welcome to IAI Podcast, where today we are thrilled to be joined by a distinguished guest, Jonathan Labrey, Chief Connectivity and Integrated Reporting Officer at the IFRS Foundation. Hello, welcome, Jonathan, at this IAI Podcast. So, Jonathan leads the foundation influencing strategy with policymakers and regulators around the world and has a wealth of experience in ensuring the coherence and integration of financial reports as well as sustainability disclosures. So, my name is Indra. I will be your host in this podcast today. And our conversation today will be focusing on the importance of connectivity between IFRS accounting standards and the IFRS sustainability disclosure standards. Jonathan, it's a pleasure to have you with us today.
Thanks, Indra.
Yeah. So can you briefly tell us about what is exactly your role as a Chief Connectivity Officer in the IFRS Foundation?
Well, thank you, Indra. And can I first of all just say thank you to IAI for hosting today's podcast. It's a great opportunity to be in Jakarta to really help to share awareness of the new ISSB standards, IFRS S1 and S2, and also talk with you about the importance of connectivity, which is plays an absolutely critical role within the IFRS Foundation. My role as the Chief Connectivity and Integrated Reporting Officer is to really think about the package of information that flows through a business to help businesses communicate with their investors, the information on a comprehensive basis that will lead to better decisions by those investors. So how do boards select the information from the standards that are produced by the IASB and ISSB? And how does that convert into information that is about how an organization creates and sustains value over the short, medium, and long term? And that is what the integrated reporting framework helps to do. And connectivity of information between the boards, between the process in between the boards, really does help to facilitate that integrated reporting approach.
Okay. So under this general purpose financial reporting framework, then after the issuance of the S1 and S2, then they will sit both the accounting standard and the sustainability disclosure standards under this one set of framework, right? General purpose financial reporting. How do you think that both of these framework can connect one to another? Because let's say accounting standards has been long established and well understood, while sustainability disclosures perhaps is a new thing. How do you think that they will connect together in a framework that are interconnected one to another?
So the first thing to say is that the IASB and the ISSB operate under a shared mission, an IFRS Foundation mission, which is to provide high quality information in general purpose financial reports. Then you think, well, how do you achieve that high quality information, and how do you achieve connectivity of information between those different standards boards? And the first thing to say is that you need connectivity of process. So you need the staff in the different boards. You need the boards operating on the basis of consistent information, consistent language, consistent definitions in order to achieve that connectivity. You need to share information between the boards. So that is a critical feature of connectivity between the IASB and the ISSB. And then you need to ensure that the products that you deliver, the standards, share common features. So, for example, you'll find in IFRS S1 and S2 very much a borrowing of many of the concepts and much of the language from the IASB accounting standards, including the definition of materiality. So really, the IASB and ISSB standards operate on very similar foundations of definition and of language. And that really does help to achieve that connectivity of information and helps to generate the conditions to enable those general purpose financial statements to be achieved.
And can you explain why do you think connectivity is of utmost importance in this regard?
I think you have to think, what is the objective here? The objective is to achieve a comprehensive global corporate reporting system, and to be thinking about corporate reporting today and financial reporting not as disparate sets of information and a compliance exercise, but really a communication from the board and the management of the company on how it is creating value and how it can communicate better to investors so that investors can make better investment decisions. That's the critical purpose of the IFRS Foundation and of having that corporate reporting system. So connectivity becomes really important, because what we know from history is that if organizations are run based on silos, and if our standards are based on silos, then a lot of risk will occur in the gaps between those silos. And so what we want to do is have connected information so that investors get a comprehensive picture, comprehensive understanding about a company. So everything that we're doing in designing the standards boards, in designing the standards themselves, and designing the package of information that companies can communicate to investors is all about how we build those connections in our approach through the mission, connections through the definitions and the language that we use, and then ultimately the connections in the products to make sure that they are seen as connected and can be used absolutely in tandem with one another.
So are you saying that this connectivity is foremost the requirement from the investor, the users of this financial reporting, or it is more of to align the concept of this product, both the accounting standards and the sustainability disclosure standards?
It's one of the big demands from investors. It's one of the big questions that we get asked is how are the boards working together to ensure that the package of information ultimately is connected. It's a really important feature. And actually, if you look at IFRS S1, the new disclosure standard from the ISSB, connected information is a core part of IFRS S1. And it's really why IFRS S1 and S2 should be seen together and should be adopted in tandem, because they're really indivisible. IFRS S1 sets the principles, for example, that principle of connected information. IFRS S2, which is the set of disclosure requirements on climate, is one interpretation, one way of adopting many of the principles that are outlined in S1. So that connected information piece is absolutely fundamental to the ISSB's work. And that can take place in a number of different ways. So for example, the ISSB standards, they're location agnostic. However, you can have cross-referencing between the ISSB standards and the financial accounting standards. So that's one way of making sure that there's that connectivity, and also that there are consistent assumptions between the sustainability disclosure standards information and the accounting standards as well.
Okay, you mentioned about the assumptions. So how do you think the importance of having consistent assumptions in preparing the financial statements, in preparing the sustainability disclosures? Because as you know that there are a lot of estimates involved in preparing the financial statements, and the management also has to exercise their judgment in using assumptions and so on. While on the other hand, when the company are to prepare these sustainability disclosures, then they have to apply assumption as well. How do you think is the importance of having a connected assumptions between these two reports?
I think consistency in assumptions is important, and that's referenced in the standards, but only so far as that is possible. So what we're not seeking to do here is impose unnecessary or disproportionate burdens on businesses. But where those assumptions can be made in a way that is consistent, we believe that helps to achieve the connectivity that we know investors need and what investors are demanding.
Okay, great. So can you tell us about what will be the work plan of both boards in working through this connectivity project? So is there any specific work plan that the board will carry out in terms of increasing the interconnectedness between these two standards as of now?
So I think there are two main ways that I would answer that question. The first is that day to day, there's a lot of cross-functional work happening already between the two boards. And that is happening without the boards having actually ever met formally as a joint board. So what we've been able to demonstrate in the first year of operation of the ISSB is that you can have this consistency and connectivity of approach without the boards necessarily having to meet. So you retain that independence of the two boards, but you can have the connectivity. And the way that has worked through is that, for example, at a staff level, at a technical staff level, the ISSB has borrowed from IASB technical staff to help in the drafting of, for example, IFRS S1. There's also a sharing of information after each of the boards meet. There will be a sharing of information with the other board on key matters that have arisen during that board meeting, so that there's a consistent process of communication between the two boards. And then the third thing that I would point out is the ISSB's agenda consultation that closed on the 1st of September, and which the ISSB will be considering over the next few months in terms of the responses, over 400 responses to that consultation from all around the world.
Including Indonesia, I think.
Including Indonesia, for which huge thanks.
Okay.
And what I would say there is that one of the questions, actually the fourth project that was identified as a potential project, was called integration and reporting. And the questions that we asked of our stakeholders were, should this be a priority now, this project on integration and reporting, which really does take connectivity to a new level. It's really thinking about how you change the outcomes of the information and how you embed the interconnectedness of the information. Should this be a priority now, or should we be focused on the development of the standards? Should we work together? Should the IASB and the ISSB work together on a joint project on integration? And should we be using the existing resources that we have available, the existing tools, to help with that connectivity? So the IASB's management commentary exposure draft, and also the integrated reporting framework that became part of the IFRS Foundation's materials when they consolidated with the Value Reporting Foundation last year. So these are questions that we pose to our stakeholders to see whether we should be taking forward this work in an even more formalized way through a project, and that those important consultation responses will be considered and deliberated upon over the next few months before decisions are made on which projects we should be taking forward.
Okay, great. So, and on integrated reporting, because your previous role was on IIRC, so how do you think integrated reporting framework can enhance connectivity and eventually enhance the quality of information provided in this general purpose financial reporting? How do you think integrated reporting paper sits well on that objectives?
Well, what an integrated report does is it really provides the investor with a first look at a company. What is its strategy? What is its business model? How is it using its resources to create value over the short, medium, and long term? So it provides the investor with that first look at a business. How is it being governed? Is it being well governed? Are the key risks really being taken into consideration? And then the investor might then look at the data and the information in more detail and really make an assessment from there. So the integrated reporting framework and the integrated report really is the embodiment of that connectivity. Connectivity of information is, after all, one of the guiding principles of the integrated reporting framework. It's bringing together the information, not just linking it, really integrating the information so that the reader can see how the different sources of value creation are being interconnected, and the trade-offs between the different sources of information and the decisions that a board might make are actually being used in order to create value over the short, medium, and long term. Since the IFRS Foundation has adopted the integrated reporting framework, it has used the framework in two key ways. First of all, in the ISSB's standards, the ISSB has used the concepts and principles of integrated reporting. First of all, I think in something like line 8 of S1, it says that, a business is really inseparable from its broader stakeholders when it's thinking about investor information. That it is inextricably linked to the needs and expectations of society and so on. So that's taken directly from the integrated reporting framework, that philosophy, but also in its definition of sustainability itself, and also in the use of connected information right the way through the standards in both S1 and S2. And then the IASB, we've been doing a lot of work with the IASB, really comparing the integrated reporting framework and the management commentary exposure draft so that we can really understand the similarities and differences between the exposure draft on management commentary and the integrated reporting framework. And what that technical analysis has revealed is that there are many more similarities between the integrated reporting framework and management commentary than there are differences. So we're really working to make sure that cohesion comes through again in the products that the IFRS Foundation is responsible for, using integrated reporting, using the concepts and principles to strengthen the standards, and also promote the continued adoption of integrated reporting as a framework in jurisdictions around the world.
Yeah, great to hear that. So as you touched about management commentary, and as we all know that now IFRS practice statements on management commentary is non-mandatory guidance. So it is some sort of optional guidance that jurisdiction can adopt, and it will not affect their status of adoption of the IFRS accounting standards back then. So do you think that this will change the trajectory of this management commentary practice statements ahead, meaning that if it is to be incorporated in the principles of connectivity in the sustainability standards, will this change the status of this management commentary practice statements to be, a mandatory requirements moving forward? Do you foresee this?
Well, the first thing I would say is that the management commentary exposure draft, I think, is a really important document. And it may not be a standard, but it is definitely providing context to the financial statements and, a management commentary on the context under which the financial statements are being prepared. And I think that's a really important and underestimated resource within the IFRS Foundation's materials. Clearly, the IASB conducted its consultation on the new exposure draft, and it decided that pending the establishment of the ISSB, it would pause that project, allow the ISSB to go through its consultation, which it is now completed, and then the boards would consider, once they've analysed the responses from the 400 plus consultees, they would then decide as two boards how to take that consultation forward. Should there be a joint project, then that may well encompass the management commentary exposure draft. If the ISSB decides not to pursue a project on integration, then it may well be that the IASB decides to pursue the management commentary exposure draft project and kind of trigger that continuing as a board on its own independently. Or it may choose to do that independently, but collaborate with or work with the ISSB without there being a formal project. So there are different ways in which this could be taken forward, but these are decisions for the boards to make. And I wouldn't wish to prejudge that, because it will be founded, as is correct under the due process of the IFRS Foundation. These judgments, this analysis, these decisions are founded on the due process of considering all of that stakeholder feedback. And it really is important that the boards have the time and space to consider the detail of that feedback and then come to decisions appropriately and in good time.
Okay, great. Great to hear that. So if you talk about in practice, perhaps people are still confused of how to have a connectivity between financial statements and sustainability disclosures, because let's say some companies argue that, yes, they are aware of this climate-related risk, for example, but because of the requirement in existing accounting standards, then they are not reflecting the impact of this, let's say, the impairment of the asset and so on, because of time horizon and so on and so forth. So how do you think this integrated reporting framework may fix this issue that are currently there in practice?
Yeah, I think it's a really important point. And I think that if there were two really game-changing developments that IFRS S1 and S2 help to bring about. One is it provides a new language for sustainability disclosure. So in many ways, the standards themselves, yes, they are standards, but actually it's the language, how you translate those sustainability issues that we're all aware of. Many companies have been using different standards over the years to communicate their sustainability impact. But the question with IFRS S1 and S2 is how do you then use that to inform investor decision-making? And that means a change of language. It means using the language of investors. It means using that accounting language. And therefore, I think it's the language issue that is the most important from a kind of S1 and S2 perspective, how you use the accounting language. And that helps you to achieve that connectivity with the general purpose financial statements. The second issue, and you're right, is the time horizon, thinking now over the short, medium and longer term. And I think here, what I would say is what we've done is embed the Task Force on Climate-Related Financial Disclosures, the TCFD recommendations within S1 and S2. And I think that's really important for two reasons. One, it demonstrates that we're using existing resources, existing frameworks, existing standards for the development of S1 and S2. So these are framework standards, recommendations that the market should be familiar with. They should be familiar with adopting them. And I know that in different markets, and Indonesia is one of them, where the market is at a different stage of adoption, but nevertheless, there will be some familiarity with these concepts. The second point is really the point that was made by the Financial Stability Board when they established the TCFD in 2015. And there was a speech by the then chair of the Financial Stability Board, Mark Carney, very important speech called How Do We Address the Tragedy of the Horizon? And the point he was making was that the issues that arise from sustainability disclosures, climate risk, other sustainability risks, they're known to us. These are not unknown risks. Yet we have accounting systems and corporate reporting systems, or had then, which really fail to account for those future long-term risks because we are in some ways trapped within quite a short-term disclosure horizon. And what he was saying is that we need ways, we need systems, we need standards, effectively, that help to address and tackle that tragedy of the horizon, where there is a potential market failure by not taking into account today, in today's accounting and today's corporate disclosures, those known future risks. It's not that they're unknown, they're known future risks. And he said that the only way that you could achieve that was by making sure that the data that was available to a company on the climate-related financial risk was embedded within the accounting information, and that companies were using existing accounting methodologies, existing financial reporting practices, and existing risk management processes in order to embed and incorporate climate-related financial risk within the mainframe of the governance of an organization. And I think that that was a critical insight, and the use of the TCFD and now the embedding of TCFD in S1 and S2 really does complete that picture and tackle that tragedy of the horizon, whereby companies now today using S1 and S2 can really take into account the future financial risk associated with climate risk. And we will, of course, over time, because we're climate first, but not climate only, we'll be extending that to other sustainability risks and opportunities in future as well.
Okay. So are you saying that the board will resolve this issue through management commentary project, or whether this will result in tweaks in the accounting requirements so that, let's say, this climate-related risk may have affected the valuation of the company's asset through impairment and so on? Or do you think that this may affect both, meaning that the accounting requirements in the future may change because of that consideration, and in the meantime, then the board will resolve this issue through management commentary project?
So I think it's really important to recognize that the accounting disclosures at the moment, the IASB's accounting standards at the moment, do allow for companies to disclose, the impact of the financial impact of climate risk, as you say, on, for example, the impairment issues. And the IASB has released some educational materials most recently to really explain how the IASB's accounting disclosures are relevant to these issues of climate and other sustainability matters, where they impact on the financial performance of the business. And as I said earlier, there is an opportunity for the cross-referencing of information from the sustainability disclosure standards to the accounting standards, which I think aids that completeness of information. There's also a project that the IASB is initiating on climate in the financial disclosures. So again, really using some of the intellectual capital of the ISSB to inform how climate is considered in the financial disclosures. So I think what you're seeing is real consistency between the two. What management commentary and to a degree management commentary and integrated reporting will help to do is really elevate that to the point where the board is selecting the standards that best enable the company to tell its story of value creation, including how climate and other sustainability matters affect the engagement between the board and the investors to help that better decision making. So if you like, it kind of lifts the conversation up to the level of board thinking and board decision making and facilitates, and this is really important, the integrated thinking within a business. So you're breaking down some of the internal barriers, some of those internal silos within an organization so that you can communicate in an integrated way with your investors and again help the quality of information, the quality of decision making always improve.
Okay, so and Jonathan, because most of the audience of this podcast would be accountants, if not all, and then they are perhaps less used to these sustainability concepts, then what can the IFRS Foundation support that can support the application of this new sustainability disclosure standards? Is there any specific plan on that?
Yeah, so it's really important, and we recognize that, in many ways, being a standard setter comes with it, a responsibility not just to produce standards, however high quality, and these are really high quality standards because they draw on so much intellectual capital over the last 10, 15 years, but also that we need to engage very proactively with the market on the implementation, particularly of IFRS S1 and S2. So it's great that we have this kind of potential forward look in terms of the next projects, but also we have to engage with jurisdictions to help support the implementation of S1 and S2. And we're doing that, I think, in two main ways.
Okay.
One, we're producing additional material. Some of that will be educational material, guidance, an adoption guide, basis of conclusions. So if people want to look at the standards and look at how the board came to the conclusions, that basis of conclusions is available for people to look at. So that provides a really good reference guide to help support an understanding of why the board made particular decisions and came to the conclusions that they did. The adoption guide will help jurisdictions to work out how they should be, adopting the standards and how they can gain the support from the ISSB to be an adoptee nation and an adoptee jurisdiction. And then we're producing educational materials that will support the adoption of S1 and S2. The second part of that, so that's what we're doing. The second part of that is that we've got a partnership framework. So we're working with partners around the world, some of them large institutional partners, but also partnerships within jurisdictions, particularly, and this is where the accountancy profession is really, really important, because what we want to do is make sure that the materials that are presented in different jurisdictions are really relevant to that jurisdiction, that they're consistent with the regulatory framework, with the business practice and culture. And we can't do that sitting, in Frankfurt or in Montreal, or in Beijing or in Tokyo. We've got to do that, working with local partners and encouraging local partners to produce materials themselves that will help their stakeholders within their jurisdictions to adopt IFRS S1. So we commit to working with you, with IAI, to help, support the adoption of IFRS S1 and S2 in Indonesia, and work with you to help you both to share the resources that we are providing at a global level, but also work with you to ensure that you feel able to develop your own materials locally that are really going to help support and engage with the local market. And that's our commitment coming from the ISSB to help support the capacity building effort to really build awareness and knowledge and then build the expertise so that these standards can be adopted as the global baseline for sustainability disclosure standards for the capital markets, and really do that here in Indonesia as well.
Okay. You mentioned about the adoption guide. Can you explain a bit about what exactly is this adoption guide?
Yeah, so the adoption guide really starts from the premise of, how do we demonstrate as a jurisdiction that we have adopted the standards, the IASB standards, in a way that allows us to be able to say, consistent with what, as well IOSCO has said, because they've endorsed the standards, how do we make sure that these standards are adopted in a way that is consistent with that global baseline that we talk about? Because the goal of the IASB is to achieve a global baseline of disclosure standards. Now, we can't have that global baseline if jurisdictions take a piecemeal approach to the adoption of IFRS S1 and S2. If they only apply S2, if they only apply S1, if they start unpicking, IFRS S1 and S2. So what the adoption guide does is really demonstrate it. It really helps jurisdictions to understand how to achieve that kind of global baseline within the context of their local jurisdiction, so that we as the ISSB can testify to the fact that the local jurisdiction has adopted IFRS S1 and S2, which obviously sends a really powerful signal both to the regulator, to IOSCO, the organisation that has endorsed the standards, but also to international investors, because really the real meaning and purpose here is to ensure that the investor community has the information and the confidence that the information is being delivered to the market. So that adoption guide really is a helpful guide to how to ensure that there is that consistency of approach so that we can achieve that global baseline in the sustainability disclosure standards around the world.
Okay, great. And about the capacity building, what kind of activities that the IFRS Foundation can support or other jurisdiction in terms of building the capacity of this profession, let's say the accounting profession, to embrace the sustainability disclosure standards?
So I think I genuinely believe that the accountancy, I've worked with the accountancy profession for many, many years in my career in different roles. I genuinely believe that the accountancy profession will play a really significant role in the development of the adoption of the implementation of the ISSB standards. They'll play a really important role because what the accountancy profession has is a kind of robustness and a rigor. From a kind of measurement perspective. It's really important that the information produced is objective, capable of being verified, capable, ultimately, it's not the role of the IFRS Foundation to provide assurance, but it is the role of the IFRS Foundation to provide standards that are capable of being assured. And the accountancy profession plays a huge role in making sure that there is that objectivity, that there is a high level of ethics underpinning it, good judgment. All of those things that we know the accountancy profession is known for are going to be essential as we develop and implement the ISSB standards. So I think the accountancy profession has a huge role to play, both in terms of the adoption and implementation of the standards, to make sure that we adopt them, with the rigor with which they have been developed by the board, so that we provide that objectivity of information, but also, in engaging with the IAASB to make sure that the assurance standards are also applied consistent with IFRS S1 and S2 as well when the time for that comes, so that we have trust and confidence in that objective information. So I think the accountancy profession has an absolutely pivotal role to play in the development of this global system now for global corporate reporting with sustainability disclosure standards at its heart.
Okay, great to hear that. So perhaps my last question for Indonesian accounting profession that will be in an early stage of embracing the sustainability disclosure standards, what would be your suggestion to the accounting profession in Indonesia?
So I think the first thing to do is and there's no getting away from this, is to kind of read the standards, understand the standards. One of the wonderful things coming to the IFRS Foundation quite new that I hadn't properly appreciated is that all the decisions, all the board meetings are held publicly. So there are opportunities, and If you want a shortcut to this, you can look at the Advisory Council of the IFRS Foundation. They also hold their sessions publicly, but all the recordings are available on the, if you're looking at the ISSB, on the ISSB's website. So if you want to really understand and get a feel for the why, why did the board make a particular judgment, then all of that information is available and readily available. So from my perspective, I think there's nothing that really replaces the richness of listening to those board conversations and of reading the standards. There is then the guidance that is available. And then what is coming, and we hope to say more about this at COP28 at the end of November, beginning of December, are the materials that we'll be providing to the market, those educational materials that I spoke about, the online resources potentially that we'll be producing, because that will really help, I think, motivate a different layer of understanding as well. So hopefully they will be really accessible and accessible to the accountancy profession here in Indonesia, as well as to the wider world. So I think start with the reading, the understanding, the watching, and then look out, please, at COP28 for an announcement on the educational materials that we'll be providing and the additional resources.
Okay, great to hear that. So I think we look forward for the announcement in the COP28 then. Okay. And Jonathan, it's been enlightening to discuss with you the connectivity between IFRS accounting standards and IFRS sustainability disclosure standards. And thank you very much for sharing your insights and for the commendable work that you and the IFRS Foundation are doing in fostering the integration and transparency in financial reporting. Again, thank you.
Thank you, Indra.
Thank you for watching this IAI podcast, and see you again in next IAI podcast.